Now for our feature story of the day. Bitcoin price to 52 million in the bull scenario by the year 2050, which is 26 years from now, according to VanEck. That's right. Let me break this baby down for you. As you can read in the headline, Bitcoin price by 2050, 52 million, treasure or a $0 trap? I'll tell you my honest feedback. I think Bitcoin's more likely to hit 52 million per coin than go to zero. But what are your thoughts on that, family? Let me know. So yeah, as we approach the close of the first quarter of the 21st century, the world has witnessed remarkable transformations across nearly every domain. And obviously, amongst this, led by Bitcoin, has been nothing short of a revolution. However, as we look forward, the future of Bitcoin remains fiercely contested. So the million-dollar question becomes, is Bitcoin headed for a 52 million valuation or something more modest? Let's discuss it, yo. Now, Bitcoin's ongoing growth has led experts to speculate about its trajectory over the next 25 years. While some envision Bitcoin reaching extraordinary heights, others foresee a drastic downfall. Let's first examine the arguments supporting the bullish future for the Bitty. So here you go. A comprehensive analysis by VanEck's digital asset research team projects Bitcoin's value can surge to $2.9 million in a base case scenario, or reach as high as an astounding $52 million in a bullish scenario by 2050. Now, granted, that's a pretty substantial gap. Nonetheless, it is what it is. So what's driving these optimistic price predictions? VanEck's research is rooted in the belief that Bitcoin will evolve into a key global reserve currency. Could you imagine Bitcoin achieving that? Let me know. The firm anticipates that the Bitty can soon play a central role as an international medium of exchange, particularly in the implementation of new Bitcoin Layer 2 solutions. They also predict that the Bitcoin will facilitate 10% of the global trade transactions and 5% of domestic trade by 2050. Furthermore, VanEck suggests that central banks could hold 2.5% of their assets in Bitcoin by then. And here are some significant factors VanEck highlights that could contribute to the Bitcoin value surge by 2050. Number one, a transforming international monetary system. A major driver of the Bitcoin potential rise is the shift in the international monetary system, the IMS, and according to the VanEck analysis, current trade indicate that economies are gradually distancing themselves from traditional currency reserves. Today, the IMS is largely dominated by the US dollar, along with the British pound, Japanese yen, and the euro. A country's currency is used in global trade based on its share of the world's GDP, which in turn strengthens the financial infrastructure built around the currency. Now, for decades, the system had remained stable, but cracks are beginning to show. VanEck's research notes that the US dollar share in cross-border payments has hovered around 61% for the past 45 years. However, the euro and the yen have seen significant declines. The euro's share of global payments has dropped from 22% in the mid-2000s to 14.5% by the end of 2023. And its presence in central bank reserves also decreased 25% in the late 2000s to 19% in 2023. Meanwhile, the Japanese yen has fared even worse, with its shares of global payments falling from 12% in the mid-1990s to under 5% in 2023. While its central bank reserves has shrunk from 6.2% to just over 5% in the same period. These shifts suggest the reliance on the principal four currencies, the US dollar, the yen, the euro, and the pound, waning globally. Now, VanEck posits that the diminishing dependence opens the door for Bitcoin to fill the gap in the years ahead. Now, de-dollarization and the emergence of a new IMS. The VanEck analysis highlights the significant shift tied to the de-dollarization. Although the US dollar remains a dominant global reserve currency, many nations are gradually moving away from it, a trend known as de-dollarization. Several factors are driving this transition, including the following: the US dollar becoming increasingly expensive for emergent economies, changes in oil demand and trade relation with the Gulf countries, and geopolitical events, the most critical being the Russia-Ukraine conflict, and let's not forget the BRICS movement as well. This gradual distancing from the US dollar is paving the way for the new IMS. According to the VanEck's research, the Chinese yuan, the renminbi, has seen its value double over the past year. Countries such as Saudi Arabia, Brazil, and Russia are increasingly using the renminbi for international trade in place of the US dollar. And moreover, emergent economies are favoring local currencies over the US dollar. For instance, India is now purchasing oil using the Indian rupee and settling trade in Malaysia with the Indian rupees. Now, another factor is the distribution in traditional international currency reserves. The transition away from traditional IMS has disrupted global currency reserves. VanEck projects that by 2050, there will be a rise in bilateral trade agreements and a more significant role for the Chinese renminbi. And additionally, emerging market currencies could account for 3% to 7.5% of the central bank reserves over the next 25 years. A reliance of dominant reserve currency diminishes. VanEck foresees the Bitcoin share of global reserves climbing to 2.5%. The firm also predicts Bitcoin's role in international and domestic trade will increase, capturing 10% to 5% of the market share. Now, another factor, I'll read, this will be the last one. Bitcoin emerging as a new reserve currency. In this evolving IMS, Bitcoin is likely to emerge as a new global currency for the global economies. VanEck asserts that most emerging markets lack the stability or the influence to achieve reserve currency status. And while some countries may lean on China and other emerging powers, those wary of suboptimal reserve options might turn to the biddy. VanEck identifies several advantages that Bitcoin offers as a reserve currency, including the following: unchallenged monetary policy, neutrality, adequate property rights, and a lack of government bias. So as we know, Bitcoin's decentralized neutral structure allows for transparent software-driven algorithms rather than politically influenced decision-making, making it an attractive option for reserve status. And I mean, we can go on and on. There's actually a very long article. I'll include it in the show notes below the video in the description, but it breaks down the math. And again, this is according to VanEck. It's a major asset manager. So I'll just read you the highlight here as far as the prediction. Assuming that the Bitcoin velocity is similar to the US average, approximately 1.5. VanEck analysis conclude the Bitcoin's base value could reach 2.9 million per coin by 2050, representing 1.6% of the world's financial assets. And while the bearish scenario pegs Bitcoin's value at 130,000, the bullish outlook sees it skyrocketing to an eye-watering $52 million per BTC. Let me know if you agree or disagree with the major asset manager. Welcome everyone to the Q&A segment of the live show. I'm going to do my best to read all the comments out loud. Let me know your thoughts, projections, predictions, and we'll go from there. Any of you have English lops or need a breeder? Hear me out. Hey, which came first, the chicken or the egg? What if the chicken butt and the first egg popped out one side of the chicken popped out the other? I understand. I was actually, whoa. And I love the comments are coming so fast I can't keep up. Nothing comes from itself. It has to be created and nurtured or it fails miserably. Chicken butt is the wormhole. So you're saying the chicken butt is the wormhole. It sounds like facts solve that mystery. I have a Rex, not lops. Music better meet production on the Rex. I made a crypto thought experiment, says Adam. Hey fam, shout out Laura. What's up? I didn't get much sleep last night. My brain is hurt trying to figure out what you just said, Shandy. The only valid estimation is the percentage revenue of the year for the monetary debasement, and I assume that it'll be 10% by 2040 until 2040, even 15 to 20% each year.